What's up, guys? Let me get to the stock real quick. Let's see. Tough day, I know. Tough day. Was not expecting all that. Let me pull up a couple things real quick. Go to Twitter. Okay, let me pull this up. Hang on. Trying to present this. Let's see. There we go. Okay. All right, we can see this. All right, guys. This is what we're looking at today, okay? Let's see some comments. All right. All right, guys. So check this out. Sofi right now has 21 analysts covering the stock, okay? 21 total analysts. Just today, after the earnings, 11 of the 21 analysts updated their price targets, guys. So literally half of them have come out, gave us updated price targets after looking at the earnings. And it's just insane to me, the variety, the different opinions, it's just insane how off everybody is. It just doesn't make sense. So you can see we got the Wedbush $3 sell rating. He actually updated his like literally like right after earnings sell rating immediately, guys. Compass Point, Baloney, sell rating $4. KBW, the Parrot, 650 sell. And then you guys notice like all of our like top 4 legacy bank competitors are all right near each other, guys. Look at this. Goldman, Bank of America, JP Morgan. Look at that, guys. They're all right next to each other. 8, 9, 10. Hold, hold, hold. The exact same thing they've been giving us for multiple quarters. Like they've been at these price ranges for like 9 months straight, it seems like. And then you get 2 up here, Jeffries and Truist, 5-star analysts, 15 and a 14, a 12 from Deutsche Bank, not really, a top 10 competitor. It's just a big mixed bag. It's crazy, guys. I just there's just nobody's doing the exact same analysis. Everybody's analysis is different. One person focuses here and one person focuses way over here on like the negatives or the positives. Like no one can come to an agreement at all, guys. It's crazy. I'm gonna go through a couple comments real quick, see what you guys think. Moon, they said. I prefer the gap fill right now, guys. I've seen SoFi fill the gap 30 times. So probably gonna happen. Some bull. Big picture, guys. So the thing about Wedbush is they're getting like he got his article pushed out today. We're gonna go over that article. I wrote a little bit of update on my Twitter. He's one of the sell rate. There was only 3 sell ratings. So there's 21 analysts right now, and 3 are the sell rating. Guys, I know what you're thinking. Why do the sell ratings move the stock so much, but the buys don't do anything at all? That's crazy, right? That's just crazy to me. One second. Somebody's calling me real quick. Hang on. One second. Sorry guys, I got my own business where I do commercial cleaning, pressure washing, roof cleaning, and yeah, CEO boys. CEO. Don't take any crap from nobody. Nada. Like for example, today, let's see, what did we make today? Today we made like $1,000 and I profited like 600 bucks, worked like 2 hours, so 300 an hour. That's my rate. And I make 10 times less doing these videos for you guys. 10 times less I make. So just know that I enjoy doing this, but I really think that the SoFi's fundamentals are there. And let me get going into this video, guys. You're really gonna enjoy it. Sorry about that call. Let's see. Wow, the competitors rate at a hold. Specifically, the top 5 legacy banks in the world. They just keep us at the same price target. Guys, I'm gonna be honest with you. If SoFi were to miss an earnings and put out like a Tesla type of earnings miss, where Tesla dropped 13%, we're going down 20 to 30, 35. I'm telling you guys, like the stage that Noto's at right now of SoFi just getting the institutions to pull the trigger, he can't miss. He can't miss one earnings. Nada. It's just that's just how it is. Like, guys, this is why they say individual stocks are a massive risk, and they are. Like, think about it. A bad day on an index, you're down 2-3%. Like, that's a bad day. On a SoFi stock or other high growth stocks, you're down 30% on the nastiest day possible. So that's the risk you're taking. You're taking the chance on Noto to literally not miss and then bring out our earnings where it's like, okay, how did we miss this? Like what are we missing right now? This is not a bank that's growing 3 to 6%. It's not. Guys, let's look at the Wedbush real quick. I got it pulled up right here. So as you guys can see, 3 cells. We're going to be looking at the one that, of course, is making the headlines. Obviously, of course. Where is this sucker at? Okay, here it is. Okay. So here it is, boys. This is it. This is it. Don't jump the gun, says Wedbush. Don't jump the gun. You know he's going to go in hard. He's going in hard. So this is the earnings. SoFi posted 48 million compared to a loss last year, blah, blah, blah. Top line growth, 34%. The beat was boosted by increasing its fair mark on personal loans to 104%. Looking ahead, the company is calling for 2024 revenue between 2.4 to 2.44 billion. Guys, remember, this is what SoFi just put out. This is their starting point. These guys are going to raise. So, of course, his headline is this is what they put out. This is what numbers. They're below the 2.5 revenue. Guys, this is what SoFi does. This is their bread and butter, and he doesn't respect it. He's already saying this is the numbers, 2024. This is it. So, see what I'm saying with him? That's roughly in line with Wedbush's David Chiaverini implying mid-teens revenue growth rate. So, guys, when he says mid-teens, this is literally like 18% growth. Remember, 2.5 billion was for like 22. So, yeah, whatever. Mid-teens. He's trying to say like 14 to 15 to make it mid, but it's not. I mean, this is like 19% growth, I think. So I think SoFi is going to be way higher because we already know they put out 20% to 25% growth for the next 3 years. And they're going to smash it this year. I'm thinking 35%. And you see, of course, he puts the slowdown from 35%. So he's just running with this Q4 start of 2024 guidance. He's just running with it. He's running as hard as he can with it right now. The company said its longer-term vision, expecting 20 to 25% compound revenue growth through 2026. Although Chiaverini thinks the guide is more aspirational than achievable. There you go, guys. That's the lie. He's saying it's a lie. It's a fantasy. It's a bear. See what I'm saying? Like these guys are writing. How are you going to write an analyst price target saying the management is lying when they beat their expectations, increased guidance like 8 times as a public company? How are you going to now say that it's a lie, it's not achievable, it's a dream? You see what I'm saying? He's just making up his own opinions. He's so deep in his price target right now that he can't let it go. So no matter what, sorry, I got something in my eye, a little dust or something. So no matter what we report, I don't think he's ever going to let it go, guys. I mean, maybe if we report like a 200 million, 150 million net income, he'll do 350 as a joke, the $3.50 price target. So this is what I want to talk about, guys, okay? This is what I'm talking about right here. When taken into context of longer-term compounded revenue growth rate goals, it implies significant step up to get to that 2025, 2026 growth, which we fear could be difficult to achieve. The analysts explained, even though company is now GAAP profitable, we believe capital constraints could limit lending segment growth, and we fear the implied growth in the tech segment may not be enough to offset this. So look what he just said, guys. He just said SoFi's capital constraint and it's going to limit their lending growth. Guys, SoFi just said they're going to limit lending growth. They literally told you it's going to be down from last year. Did they say it was because of capital constraint? Did they say that? It's more because of macro, delinquencies rising up, tougher economy, waiting on the Fed to make the interest rate announcement cut of when they're going to do it. So, guys, they already told you lending is going to slow down. Let's not worry about why it's going to slow down. Let's just listen to management and assume lending is going to slow down, okay? So he's implying what management already said. He's just adding on, because of capital constraint, because he swears by it, even though SoFi is selling loans, bringing in $4 billion deposits, tapping off their warehouse facility. He's just making it sound worse than it is. And he said the tech segment will not be enough to offset this. Okay, let's listen to him even more. Let's say Galileo just grows by the 5 to 10 million that it's continuing to grow at right now. He literally just left out financial services. He didn't write anything about financial services. I'm pretty sure. I think I've already went over this. How are you going to leave out 1/3 of the business? See what I mean? These guys just pick and choose. So now you're not going to talk about financial services that management just said we're going to grow at 75% this year. We're also going to grow Galileo 20% this year. You see what I'm saying? He's just running with, okay, Galileo grow 20%. That's not enough to cover lending pause. Why won't he put an article, upgrade my price target from, what is he at? From 3 to 6. Looks like financial services could offset lending constraints. You see what I'm saying? The lending business is profitable now. Like I'm talking, they just profited like $25 million. Anthony Noto said they're about to run with it. 75% growth year over year. So you're going to see that bottom line just take off. I think that they're going to grow from financial services is going to not grow 20 million quarter over quarter. I think they're going to ramp it up to like 30 million quarter over quarter to cover for lending. Guys, I'm telling you right now, there is a 100% chance, no, 200% chance that SoFi will post a back-to-back profitable quarter. I looked at the earnings expectations, and they're going to beat it. They always do. They always raise 100% of the time. I think they're going to turn a profit of like $40 million while just tapping off, completely pausing on lending. And they're just waiting for the Fed to give the go-ahead. And then, guys, you're going to see lending just take off because the demand is there, and they're going to continue to just gobble up all of these deposits. So I think lending is just pausing now, and the business has other revenue streams like the financial services to maintain this growth. I think SoFi is going to finish off the year over 30% growth again. I think they put out these numbers to just put a baseline in, and I think this guy is delusional. then he goes into delinquencies and personal loan rate. They're going to run with that forever, guys. So there's no point to even talk about lending, because let's say lending, let's say they weren't capital constraint, nowhere near it. Demand was doubled and they just doubled lending, net income like doubled. You don't get anything out of it. No one cares. Lending will never get a premium, even though it turns profitable dollars. That's the thing. We use lending as a baseline to turn profit and to use that as, marketing expenses, paying off stock-based compensation to the employees. Okay. So lending is just your baseline. It's going to help you grow your business. But I'm telling you, these other businesses like a financial services, I think it's going to turn out just as profitable as the lending segment. Not like maybe 1 to 2 years. Like, this business is growing so fast. So I think he literally just wrote this and said, lending's paused, lending's done. Galileo will not be able to do it. And that's true. But how are you going to leave out the other 30% of the business and not talk about financial services? Freaking 75% year over year growth, massively profitable already. You see what I'm saying, guys? Let me go read some of your comments and see how you feel about that, like what I just said. Holy crap, we got 300 people watching live. Okay, let's see this. None of them is authentic. So biased. Can't believe bank charter and profitability killed SoFi the same. Complete stock manipulation with no real bar. Think we need to regulate the industry. How can we end this? Guys, we freaking end this by just freaking stealing all the freaking customers from all the banks. I was thinking about it the other night. Like, for me to get bearish on SoFi, like really bearish, and know that something is wrong, like something's wrong, that these trends have stopped or is not happening anymore, would be for like SoFi to be adding 200 to 300,000 users per quarter. Now, even that sounds amazing. I mean, you're bringing over 300,000 new members, but that's personally when I would get bearish, because if SoFi wants to just take these guys down, we got to get to 1 million users a quarter. And I'm going to be honest with you, it is not going to be an easy number to hit that million. Like, I know we clipped that 700, but SoFi is not getting any credit for getting 600 to 700,000 members, guys. These are massive, massive accomplishments. I love you too. Yeah, need bigger institutional buying so we get rid of volatility. Of course, guys. Of course. We need this. Wedbush loves the shorts. Guys, I mean, you just read the article. It's right there in front of you. We know that SoFi has 3 business segments. They just left out one to bash lending being like pause. I call it a pause. They're pausing on lending. I don't care if growth goes to 0. If we're growing year over year at 25, 30% still, and profits increasing, I don't care. Okay. Lending can come back whenever it wants. I don't care if we got other business segments that are going to be, printing money. It's going to take that 1 quarter for Galileo. Guys, I'm going to be honest with you. From what I was expecting, Galileo, technology, the platform, what is it called? It's called, technology platform. I forgot what they listed on the earnings, but just technology, okay? Galileo. I give it a C plus. C plus on that report. Why? Because they jumped up 7 million quarter over quarter, okay? I was expecting like 10 to 12 million, okay? So if they were at 10 to 12 million, I would have been at like a B plus. So Noto said he landed a legacy bank, regional bank. Okay, they landed the client, but they said it takes like 15 to 18 months to get all of those clients over. So what if it's a client that has 10 million users and we're just turning over the users quarter over quarter, slowly? It just takes time. I mean, what if it's bigger than that? What if they landed a second one? Okay, what if they got 2 big regional banks that are about to tap in at the second half of Q4. Remember, guys, technology platform is massively profitable. Massively profitable. I mean, we're talking 30, 35 million, 35% margins. It's printing money. It just needs to like all these customers that are in these like early stages, they need to lock them in so we start getting the transactional revenue and we start, growing revenue. So I give it a C plus. Financial services, boy, I'm giving that a A plus plus. They went from profitable 3 million quarter over quarter to profitable 25 million quarter over quarter. You see what I'm talking about? I think you got to remember, guys, they were putting all their money into lending the past couple of quarters to keep us afloat. Imagine if they just take those dollars, those marketing dollars, and just move them back over to financial services. I'm telling you, you're going to see that business now jump quarter over quarter like $30 million. Okay. He said it. He's literally saying this business is going to grow 75% quarter over quarter. We just increased our EPS guidance by 2 pennies that you guys put out. We beat your analyst expectations, and you're downgrading us for saying we're just pivoting again. Guys, they pivoted away from student loans 3 years ago. Now we're going to punish SoFi for pivoting away from student loans. We're going to punish them because you guys wanted them. You said the student loans were risky and they were unsecured and high risk. And now that we're pulling back, you're going to downgrade us for that because we said we got another business that's going to take care of our slowdown in lending. Guys, it's a fugazi right now. It doesn't make sense. Like, what the hell is going on with these sell ratings, guys? I mean, like, I want to not sound delusional, but the management, 8 quarters, hasn't missed. They say they're going to move this around, and then they do it. They're literally telling you what they're going to do, and the analysts are not believing what the management team is saying now because they say they want to pivot just a little bit away from lending for a couple quarters. Guys, what the hell is going on? Like, this Wedbush guy, I mean, he's getting so much publicity for being a zero star. And I'm telling you right now, guys, there is thousands and thousands of retail investors that don't follow me. Probably, some don't go on YouTube. There's probably just some that are on Twitter and stuff like that. And they might not follow me. And there's those people I can't get a hold of, and they're selling out when they see these downgrades. That's what these institution and analysts do. They rip these shares from retail's hands by a headline. Like, someone may see, oh, SoFi beat, and then next day downgrade, sell. What the hell? Something's wrong. Sell. Boom. And then you're going to get a compounding effect like today. 1 second, I'll go over real quick. And you can see, guys, you're getting price action like this. A negative 8% decline. I understand a lot of people, could have been selling out just from the pump. That's okay. But you're getting the after hours movement because AMD's missing, Google's missing, Lending Club soft. Like, you're getting, you beat your earnings, and now you're getting punished for what other companies are doing, guys. It's a tough market we're in. I think the Fed, the first rate cut, will clear up a lot of worries for these. I was just about to say unprofitable growth stocks, guys. Literally, I was just about to say this is going to clear up the mess for us unprofitable growth stocks. But guys, we just printed money in some of the highest interest rates in years, guys. I mean, we're printing money, okay? Imagine when we get the refinance boom across mortgages and personal loans and also student loans where, everybody wants to get in cheaper. SoFi will be there. They will be there. But for now, I was going to say SoFi is not where they want to be, but they are because they just showed you on the guide. Let's take a look real quick one more time. So, guys, this is the guidance they put out. It's a little soft, okay? It looks a little soft because we just did over 600 non-GAAP revenue, like 614 and then 594. So it does look a little soft. And I believe, I'll be honest, Q1 is probably going to come in a little soft, okay? That's okay because that's always the soft quarter for SoFi. It's always been like that. But guys, I know how SoFi likes to play these, okay? I know how they like to play it. They like to meet expectations and then smash them, okay? You probably see revenue coming a little bit lower than Q4, but the growth's still going to be there. Maybe 590, okay? 590, it's going to be a little soft. But guys, adjusted EBITDA, remember we just hit that 180. I see adjusted EBITDA coming in at like 140, okay? Absolutely awesome, okay? Just pivoting your business away. Profitability, I see the 10 to 20 million. I think they're going to be profitable 30 to 40 million. Remember we just printed 48. So if they print another back-to-back 40 when we're getting downgrades, selling, guys, that's 2 profitable quarters. I'm telling you right now, you are just waiting for the Fed pivot, and demand for all the lending by the time Q4 comes around. I mean, it could be freaking 50% higher than it was, in Q4 this year, the highest level. So, like I said, like you got your gap net income coming in for Q1, guys, profitable. These are low expectations. If they come in at 40 million, I'm happy. I mean, that's awesome. So yes, the numbers are a little soft and it looks like they're running with these numbers, running hard, even the full year, but profitability is not going away. Like, I'm not saying it's increasing dramatically from, Q4. Like, it might go down 10 to 15 million max, but think about it, guys. Their full year guidance was like 100 million, right? Where's the full year guidance? Right here, 100 million. So think about it. If they put out Q1 uh 30, 40 million, I mean, they're almost halfway there, guys, at 40 million. They're already almost at halfway to their net income. So guys, these numbers you're seeing, I think we're gonna smash these numbers right here, guys. I think SoFi will come in at like 150 to 170 million net income because I think there's gonna be a big quarter waiting for us. So I'm telling you guys, this stock right now is getting punished for analysts saying management is lying, that because lending's going to slow down, SoFi's growth is going to slow down. And SoFi has 3 businesses. Remember that, guys. This is why they have 3 businesses, to diversify, and now they're not getting credit for diversifying. Do you hear what I just said? They built these segments to diversify with different interest rate environments, and now they're getting punished when they turn away from lending. Now they're getting punished because they say, "Oh, you were all lending. Now because you're going away from lending because we said it was risky, your growth's gone." You see what I'm saying with these sell ratings at 3 and 4? This shit is crazy, man. This shit is crazy. Scam. -3 after hours. Like, that's the type of movement you get on a normal stock that's reporting earnings, like -3% after hours. Of course, I understand that. I'm just saying we should be getting a little bit rewarded for what we're doing, and we're getting like the Tesla treatment right now. Like the Dan Ives, like this was a disaster. Like, we're selling off more than Tesla. Like, what, on a triple beat? EPS full year guidance increase? Guys, the analyst said, we want 6 cents. SoFi's like, all right. We'll give you 7, 8 cents. Is that cool for the start of Q1? No, sell. What the hell? What is going on? You wanted 6. We gave you 7, 8. Guys, this is crazy, these downgrades. I'm telling you, man. This is crazy. Who is the guy that wrote that article? Give me 10 seconds. Damn, it's a little too big. So this is the guy that wrote the article, okay? I put this out. He was the first analyst to cover the SoFi stock. Breaking news. David Chiaverini Wedbush rated sell rating with a $3 price target today. And look at this. He is like 1/5 of 1 star. And he put the lowest price target on SoFi like minutes after earnings. Minutes. I mean, look, guys, I mean, I put this stuff out so people can see it and then correlate the rating of the analyst to what he's doing. I mean, look at this, guys, 91,000 views. Like, I want people to see this stuff so they can not sell out when a guy like this gives you a $3 price target and says, no, you're not diversifying. You don't have other businesses to handle like it's crazy, guys. So one second. Let me show you the other. Let me show you one more. I got another one right here for you guys to see. Look at this. Look at this. So you just saw that, okay? The lowest price target humanly possible on the SoFi stock. Okay. Now look at this. Now look at this. I said, I'm more determined than ever to create diamond-handed retail investors with high intelligence that can see fundamentals and understand that SoFi will make billions in profits very soon. Now look at this. Do you see the difference, guys? Look really closely. What do you see? What do you see right here? I see a $15 price target. I see a $14 price target. And I see a $12 price target from 3 analysts that are all 5 stars that are top 300. This guy's top 100. This is top 300. This is top 150. Do you see this? And of course, this only gets 10,000 views. Why doesn't this get 100,000? You see what I'm saying? Do you see? Look, listen to what I said. Sometimes fear, it gets more eyes than positive news. You see what I'm saying? Look at the views. 10 times more views on the red, the sell, the fear. You see what I mean, guys? And I want people to see this stuff, but it's just it's crazy. Like, you know what I mean? Like that sell rating that sell rating doesn't stick with me, guys. I'm sorry. Like the guy is full of himself, man. And I just hope we ride him to down to a 0.000 star where he doesn't have anything. Like I want him to lose everything, guys. All of his reputation. Crazy, man. Let's move over to here real quick, guys. Let's take a look at this, guys. It's not looking good tomorrow, okay? You got the AMD earnings and the Google earnings, and look at the price action. -7, -5 on Google, and then Lending Club. That's what's taking us down. We're getting punished for Lending Club's freaking conservative 5 quarters of the exact same originations, guys. Like, they don't take any risk at all, Lending Club, and we're getting punished for taking all the risk, turning profits, growing profits. Nvidia's coming down with AMD. So, guys, SPY, QQQ will get hit. And of course, you got the Fed meeting tomorrow. Jerome Powell, who knows what he's going to say. There you go, guys. So everything's going down early morning, it looks like, because of these 2 big earnings. Got the AMD and the Google. Just want you guys to see that so you're aware tomorrow. So, yeah, guys, crazy price action. Crazy, like this thing moves like it's crazy the type of price action we get. I'm gonna read a couple of comments, guys. So drop a comment if you want me to read it. Hey, I mean, I don't doubt it. Like I said, like if SoFi misses the earnings, the stock's down 30. If you beat an earnings, the stock's down 10. So it's crazy. I'll try to post it on Twitter, okay? That link. Let's see. Guys, this one is like it's not like conspiracy or like what's another good word or you got to think, guys. Like the banks, the top 4 banks right now, like Bank of America, JP Morgan, Goldman Sachs, Wells Fargo, they all have us at a hold, $9-10 hold, right? It's been there for 3 quarters straight. Do you see what I'm saying? There is no incentives for legacy banks to give an increased price target on SoFi, okay? The only way the SoFi stock will go up is with what I'm trying to do right now. Create people that there's a lot of people. I know a lot of people like to day trade. But there's actually a lot of people out there that still like to long term invest and invest, 3 to 5 years out. So if we create a fundamental base of this stock, for investors that want to take the 3 to 5 year route, the stock's volatility will start to slow down when you get more people that realize fundamentals and they won't sell out on downgrades and sell ratings. And then the stock gradually moves above the analyst price targets. Like, let's say the stock moves to like 12, 13, and then they get a nice beat and the stock moves up again to like 17. And the analysts are lagged, like the Bank of America, the Chase, and the Morgan Stanley. Like, see, their price targets are still lagged. They are forced to lift their price targets because it'll make them look bad. Their analyst ratings will continue to drop and drop and drop. So that's the only way you're going to get the legacy banks to increase their price target. You just saw 3 quarters straight. They didn't increase once. It's a hold, a hold, a hold, $1 increase, hold, 50-cent increase. You see what I'm saying? I mean, SoFi just jumped up. Like, they were expecting 0 cents. Okay. 0 cent EPS is what the analysts wanted. And let's just call it $0 because there's some charge off write-offs and EPS, the pennies. It's confusing. It should have been higher. So let's not go off the cents. Let's go off of 48 million. Boom, in your face. 48 million. Okay. Y'all weren't expecting that. Hold, hold, hold. You see what I'm saying? That's coming from your top 4 competitors. Hold, hold, hold. Guys that aren't your competitors, right? Your Jeffries and your damn it, what's the other guy? Jeffries and Truist Regional Bank. You get the $15 and $14 price targets. You see what I'm saying? The ones that aren't competitors to SoFi, like big legacy bank competitors. You see what I'm saying? So that's what I'm trying to explain to you with the manipulation right now, guys. It's absolutely crazy. Like, sorry, the dog's barking in the background really bad. Okay, let's see. I need to start. What's going on? I use SoFi. Let's go. Let's go. Let's go. 1 second. He gets the attention because he has the lowest rating. So there, if you look at the article real quick, look at the article. Let me show you this. Look at this. Let me show you exactly why he gets the most attention, guys. That was a great question. Look right here. Check this out. Where is it? Right here. Where is it? Right here. 1 second. 1 second. 1 second. Oh, man. Right here. See, look. Chiaverini remains the street's most prominent SoFi bear. You see what I'm saying? He's going to get the headlines because he's the biggest bear. Okay, so does that answer your question? Even though he's a 0-star analyst, he's the biggest bear out of 21 analysts. So whatever he says, it will make the headlines instantly. You see what I'm saying? He makes headlines faster than any analyst because he has the lowest price target. But his analysis, I just broke it down for you. He just wrote an analysis off of 66% of the SoFi business. He left out one of the business. No, wait. He left out the business that's growing the fastest. He left out the entire financial services, guys. He left the entire business out in his article and said Galileo won't be able to cover lending. So there you see it, guys. He can't write a full article about the fastest growing part of the business right now because he's got to cover lending. It's crazy. It's crazy, guy. And don't forget, it's not just him. There's 2 other ones with those 2 other analysts are the ones doing the accounting, cook the books, fair value loans. So those guys are going into that. I can't go into that stuff. Guys, do you think I'm a CPA, accountant, financial expert? That lending, personal loans and credit defaults, that shit goes on for 40 pages, guys. It never goes on. It's a math problem that will never end, lending, okay? I just look at SoFi and I'll let them do what they want to do, okay? I'll let Crystal Point, the dude from Dartmouth. Do y'all know what Dartmouth is? I'll let the dude from Dartmouth handle the math, okay? I'm not going to handle the math. I'm going to let him handle the math, okay? You see what I'm saying? Absolutely crazy, guys. Absolutely crazy. This whole lending bear article, like bear case, it's been going on for a year and a half. Like this shit will never end. You know what I mean? Like, God, I gotta stay away from the lending guy. I can't even follow that stuff. Like, I'm not. I like that SoFi's tapping away from lending for a couple quarters. Okay, I want to see them freaking ramp up financial services and Galileo even more. And then when the Bears get bearish on that, and they pop back lending back in their face when the Fed starts cutting and interest rates go down and the refinancing goes crazy, and then everything's hitting all together at once, all three business segments. So guys, that's the benefit you're getting of SoFi. They have diversification to pivot in these interest rates, okay? And we're getting punished for that because they just focus on certain things in these bear sell ratings and stuff like that. Just bought more. How far is SoFi going down? Nobody knows, guys. It's crazy. Like, think about it. Jerome Powell saves the day. Boom. SoFi's back at 850. Let me see real quick. SoFi or Jerome Powell saves the day tomorrow. We're at 875, $9. You see what I'm saying? That's what kind of stock market you're in right now. You're in a stock market that doesn't imply to your stock. You see what I'm saying? It applies to what the Fed does, what interest rate does, what yields do. You see what I'm saying? We've been in this environment. Some of you have been investing for a long time. We've been in this environment for 2 years now. The only stocks getting rewarded is the Magnificent Six, not including Tesla. Those are the only stocks in the SP 500 that are going up 50 to 150%. I don't really want to invest in those because I just feel like their growth does not correlate to their PE ratios that they're getting right now. They are getting priced at like companies growing, besides Nvidia, they're growing 20 to 30%, and then freaking Apple's putting up 3% growth or 1% growth, and they're getting a 40 PE ratio, guys. I mean, is that crazy to you right now? Like, Apple's trading at a 40 PE, we're trading at a 45 PE, and Apple's trading at a 35, 40. You see what I'm saying? We're trading at the same PE as Apple, and they're growing 3% earnings, and we're planning on growing earnings 200% to 400% the next 2 years. You know what I mean? We're just getting priced like we're doing nothing out there in the streets, like no growth at all. And if anybody wants to say SoFi needs to be priced at a Goldman Sachs or a Morgan Stanley PE of 16s, no. I've already broke that down, guys. Their earnings are not increasing the way SoFi's earnings are going to increase the next 2 years, okay? They are not going to grow their earnings by 1 to 200%. It's impossible, okay? And that's where they get their 16 Ps, and then we get bigger Ps than them. All right, let's see. Not saying selling all of it. So someone's selling a little bit. Biden is terrible. I don't know. I can't really, of course, on the platform talking about stocks, I can't really speak on all that. But I could tell you right now, I don't like where our tax dollars are going. I want our tax dollars to go to America. I don't want them to go to outside of America. Let's just keep it at that. Fix homelessness. Fix crime. You know what I mean? Stuff like that. Whatever president can fix that, they get my vote. That's it. That's it. Whatever president wants to fix that. Whatever Powell says. Whatever he wants to say tomorrow. He wants to say nice things, to the moon. SoFi's at 875. If he wants to ruin the day, earnings at Google Google and all them just put out, guys. Don't be surprised when you see Google down 10, Nvidia down 10, SoFi down 5, 10. We knew this day was coming, guys. Fed meeting tomorrow, okay? It's going to be tough. It's going to be a tough one. So good luck to all. Good luck. Good luck. I just wanted to break down these sell ratings. Or we only broke down one, but of course there's 3. I can't go into the other 2 because I'm not an expert in that field. I can't cover 50 pages of lending bearishness and how it works. I can't. I'd have to go to college for 8 years to debunk those bear articles. Lending, that shit has so many moving parts that this guy could be right on the bullishness of this part of lending, and this guy could be wrong on this part of the lending, and then the next week he's right and he's wrong. That's lending for you guys. Who cares? Who cares? If SoFi is doing it right, printing money, selling loans for above market value, let them keep doing it. Because guess what? Someone's buying those loans. Someone just bought those loans from SoFi. So you're telling me the people that are buying billions in loans are screwing themselves? That's how stupid they are? That's what the articles are saying about SoFi selling loans. Like they're still saying like the loans are incorrect. It's crazy, guys. I really appreciate it. Guys, please, if you can, smash the like button on this video for the algorithm. Subscribe to the channel if you are not already subscribed. I'm trying to really cover this stock so we can get the selling to slow down, people realizing what we really have under the hood. And guys, I just showed you in that article, SoFi management decided to give you guys a little 2026 clarity. All right, this is where we think we're headed. And guess what? The analysts say, that's a lie. That's a lie. That's what they said, guys. They called management out for lying and sold and did a sell rating. Can you believe that? Absolutely incredible, guys. They put out 55 to 80 cents. And I don't know if you know what kind of money that is, guys. We're talking like on the top end, we're talking 800, 900 million dollars in profits, guys. I mean, I can look up plenty. Like, think about it right now. I mean, I can tell you right now, not this quarter, but AMD 2 quarters ago, they just put up 300 million profit. You see what I'm saying? They're priced at 1,000 PE. And you're telling me SoFi 2 years from now is going to be putting up 900 million in profit? That's full year. I'm saying AMD put up like 300 million in a quarter. I mean, guys, like it's just crazy, guys. The type of earnings growth SoFi can get in the very near future, guys. I mean, I think SoFi is just waiting on the Fed. I think they're just waiting on the Fed, and demand is going to be crazy because I think they're just going to keep growing deposits, and they're going to be able to, double their lending in the next 1 to 2 years. And lending is going to be turning freaking, I don't even want you guys to see how much money that stuff's making. They're printing money on lending. It's crazy. Oh boy, I see you, Tevis. What's up? Chivarini is SoFi's Gordon Johnson. After a while, he's become a source of entertainment as opposed to a source of news, guys. There you go. So what I just said, someone said comment before that, why does he get the attention? So that Gordon Johnson has the lowest price target on Tesla. So that's a guy who had to ride it from $30 to $400, and now he's the man because it came down a little bit to like half, 200. You see what I mean? They'll never give up. He'll never, ever give up, guys. This is a good one right here. Look, Danny Deals. Dear Stocko, did you see how much they grew tangible book value in Q4? Increases lending capacity. Look at the numbers. Look at the facts. Listen to the Stocko, you weak paper hand turds. So like I said, guys, he wrote in the article, they're capital constraint, but they're growing tangible book value that gives them increased capacity to lend more, and deposits are coming in to lend even more. They are not capital constraint. They are taking a pause on lending because they can, and they can still grow the business in other segments because they have 2 other segments outside of lending. I think they're going to put out the exact same type of growth these next couple of quarters with lending pause. They're just taking it a conservative approach because of delinquencies rising, uh, credit deterioration, just people getting the hammer from these freaking high rates, on their mortgages, their credit card, everything. Okay. So they're just like, okay, we need to tone it back. And now let's turn to our other businesses. Galileo, massively profitable. Once again, I gave it a C plus on, profitability. They just didn't get the growth that I wanted quarter over quarter. But guys, it did finally pick up more than it's picked up in a long time, 6 million quarter over quarter. I don't think you guys comprehend like what a quarter over quarter jump of like a business segment at like 15 million is. Guys, think about it. They have 3 business segments. So if you got one business jumping up 15 million and then the other two 20 million, you see what I mean? They just need to get Galileo going. And then financial services, guys, 75% growth. That should be the headline on Chiavarini's analysis. That should be the headline. His headline should say, I still believe SoFi is capital constrained, to keep his ego high. And just as I expected, they are taking a turn off of lending. But SoFi is seeing 75% growth and profitability increase in financial services. He's not going to say that, but he should say that. And then he can add on his ego again. Like I expected, Tech Galileo platform has not showed what I thought it was going to do. It's still lagging. You see what I mean? And he could give them an increase for a 50 million profitable quarter and increasing EPS guidance. But it's egos, man. It's just egos. He can't let that price target go now. He can't. He has to be right before he dies. He has to be right before he dies. So listen to this. Chiaverini has to be right before he dies on his $3 price target, right? And Anthony Noto can't miss an earnings. He can't. Anthony Noto knows he cannot miss an earnings. If he's lagging behind on the next upcoming quarter or the quarter after that, he knows he's got to cut somewhere, cut the stock base, bump up the marketing, cut the market. You know what I mean? He'll figure it out before the earnings goes out that last day. You see what I'm saying? So think about it. Are you going to bet on Chiaverini? I can't say his name right. I'm sorry. Are you going to bet on Chiaverini being right on SoFi going bankrupt? Because that's basically what he's implying at $3 because they have $3 billion in cash. So are you going to bet on SoFi going bankrupt on this whole lending ordeal? Or are you going to bet on Anthony Noto making billions in profits? Okay. That's the two in-betweens you got to do, guys. Billions in profits or bankrupt. There's no in-between for SoFi. There is no in-between. It's either bankrupt or billions in profits, okay? That's what you're betting on, okay? You're not betting on a bank like Ally Bank that's been around for 100 years and spun off freaking 3 times that's making $300 million a quarter. You're not betting on that. You're betting on the next freaking bank to disrupt the top 5 and actually put one of them under bankrupt, guys. I'm telling you, these banks are making billions off of fees. People are going to start recognizing. Look at the deposit outflows. Just look at the growth. I mean, we're talking Bank of America negative 10% growth, Wells Fargo 2% growth. Those businesses are just hanging on by a thread. They're just being saved by the Fed. I mean, they all should have been bankrupt in 2008, 2007 when they all got on mortgages. I don't think SoFi is going to lose in this game, guys. I think they are going to win. I'm betting on billions in profits. Billions per quarter. I'm betting on billions per quarter. That's what I'm betting on. Guys, think about this. This would be the most bullish case scenario I could see for SoFi 5 years from now, okay? 5 years from now. This is the most, I'm going to tell you the most bullish thing that you could possibly see to know that SoFi won and banks are going to go bankrupt or spin off or sell their assets, all right? 1.5 million members per quarter. That's it. That's it. Do you understand what 1.5 million members per quarter would be? That's like That's like the 5-year. We got to get to a million, but I'm saying that's the nail in the coffin. It's over. Like SoFi won, and they're already putting up 700,000. We're already putting up 700,000, 600,000. Let's call it 600 because let's say 700,000 was overblown. That's the nail in the coffin. Guys, think about it. There's 360 million people in America. Freaking a third of those are, probably 70 to 100. Okay, so now we're down to what is that like? I don't know. 300. We're gonna be getting like per year on that many members. That's like stealing 4 or 5% of the market share of available accounts. Like 5 to 10%. Like, do you understand? Like, SoFi is not that far away from these types of numbers, guys. If we hit the million, these guys are putting us out of hold. I mean, do the banks realize they're not getting the 4 million accounts? The 4 million accounts would be going to SoFi, who's going to grow their EPS, their net income by 100% the next 2 years. So crazy, man, just crazy. 7.99 the target. Been there so many times. Doesn't bother me. Gap needs to fill. Guess what? The NVIDIA gap needs to fill. That's the gap you should be looking for. The NVIDIA gap. Microsoft gap. Watch out for those gaps. Those are some big gaps. SoFi is not an Apple. Nowhere close. I mean, obviously, I didn't say that. I just said Apple's. This is what I said. Apple's at a 40 PE for no growth. That's all I said, which is true. Tesla was a 95% sell when I bought it. There you go, guys. That's exactly what I'm talking about. Robin probably does it. You will see everything Monday said. Paul, what? Yeah, guys, we got some upgrades. We got a 15, the 14. I mean, they weren't really upgrades. They were more like reiteration. So those don't really do anything, guys. The fear moves the markets. It's believe it or not, this is gonna sound crazy. It's like 5 times more easier to hit the sell button than to hit the buy button nowadays. Like it's crazy, guys. I mean, the sell button is just easier. You see stocks grind their way up 20%, and then you see stocks 2 days down 20%. You see what I'm saying? The red button is so much easier than the green button. I know that's, let's see. Be sure to subscribe to the channel, guys. I really appreciate that. Oh my God. The JP Morgan guy looks like he's 10. Dude, what's his name? Damn, what's his name? Reggie. Oh my God. This dude was freaking questioning Crystal Point. Dartmouth. Guys, I laugh. If you look up Dartmouth, like getting a degree from Dartmouth, I mean, you guys don't understand how smart Crystal Point is. I mean, Dartmouth is unreal. Like, I would never question Crystal Point. And Reggie's over there. Did you say the delinquency is 6% full year or 4% right? And he's like, Reggie, as I stated in my previous remark, it was bad. And then, of course, Reggie, next day, JP Morgan, ready? Hold. Can you believe that? The Chris Rock clone. That's funny. Guys, will it go to 15 next quarter? Like I said, this is a macro-driven environment. You're waiting on the Federal Reserve to cut rates. Even though we had high rates, everybody turned to the Magnificent Six. That's where the money was at. The money's been there for 2 years. I'm not gonna chase it. I wish I would have bought it on that crazy, what was that, the 2022 dip where everything like, the Facebook $100, Nvidia, or Facebook $90, Nvidia $100. I wish I would have bought then. I'm not buying here. No, I'm not buying stocks up 200 to 400%. Okay. I'm a younger investor. I didn't want to buy the Magnificent Six. I stood have bought it. They're never going to fail, but I still think they're going to have a pullback. I don't think I'm going to be wrong about that. I'm not buying up. I'm not buying up here. I'm not chasing. I think the companies that are unprofitable, I was about to say the Sofi, the unprofitable fintechs, those are the names that are going to bounce back. I think they're going to be the ones bounce back. The Robinhood, the Upstart, the Coinbase, the Affirm, Lending Club. There's so many more, guys. I like those are the stocks, that are just getting destroyed by the freaking interest rates. You know what I mean? Those are the stocks that should turn the hardest, you would think, because money's going to start flowing again. Chia Pet, tiny 3-inch ego. Yeah. Like I said, you got two options. Anthony Noto making billions, or Chia Pet or being right about SoFi bankrupt. Those are your only two options. You bet on one or the other. He's gonna lose the quarter star he has left behind, or he has left before he is proven right. Yeah, he's almost there, man. Like, I mean, think about it. Jerome gives you the go ahead tomorrow. We're back at 9. We could be on a run on the first rate cut. Or I'm not saying the rate cut could happen, but if he gives like notice of when, like if he says like May, boom, it's gonna happen May. We're behind. I don't know. I don't get into this stuff because everyone's been guessing forever. Cage match. All right, guys. I only have 2 minutes left. I have things to do at 6:30, so I only got 2 minutes left. I'll just rip through these. Um, let's see. Let's see this one. Short volume went up to 48 million on January 29th. SoFi should bounce off the 79 inch. Trading at neutral position is okay. We are spring low. I agree. Like I think the stock put in a bottom. It's freaking profitable now. It gave increased guidance. Like it's just crazy. Like today, guys, basically we're down. We're down right now bad for two reasons. We're down because we got 3 sell ratings on our earnings. Okay. And those are spreading the fear. Spreading the fear. Buying June $9 calls and selling cash secure puts at 9. Love the action. I don't get it. Does God hate SoFi? It's not that. It's just that SoFi is competing in a market that hasn't been disrupted. Like think about it. Like Netflix disrupted Blockbuster, Amazon, bankrupt freaking Toys R Us, uh Barnes and Nobles, Tesla, GM, Ford. It's the same thing. It's called trends. It's going to happen to every business. But the money, the financial tech bank, like that's the hardest one to bring down. It's the most corrupt. It literally got bailed out for making trillions of dollars on mortgages. You know what I mean? For just giving mortgages to anybody. Stuff like that. So, all right, guys, I'll read 3 more questions. I gotta go. My next target. Hey, so there you go. You see, you're a guy that's smart and bought that stock, and held on to it. You're smart. You're smart. You played it safe. I agree. Like it could definitely happen. They have the craziest growth I've ever seen. Sell ratings, 3 sell ratings today. 3 sell ratings on our earnings. Bidenomics at work, guys. If you go to Biden's Twitter, dude, his Bidenomics, it's the most records I've ever seen. Like it's never anything bad. He has the most records. Look at the tweets. They broke every record in presidential history. I just read his Twitter, and that's what I see. So Bidenomics is working from what the Twitter says, even though I don't think he runs the Twitter. That's all I'm gonna say. That's all I'm gonna say. I'm just looking at the facts. What he writes to me. I gotta read it. Who is selling? Paper handlers are selling, man. There you go. The management told you the truth. They just said this is the difference right now. Lending's gonna pause. We're gonna pivot. We're gonna continue to grow. We're gonna grow EPS. And guess what? These sell ratings said it was a lie. All right, guys, I got one more minute. One more minute. Uh, uh there we go. Yeah, guys. the ratings are going to come out soon. So we're going to get the new rating. I think SoFi is going to jump up like 7 to 10 spots. Over 800,000 members. Debt is dropping too. I pointed that out, guys. That's absolutely awesome. Good to hear that. All right, y'all. I really appreciate this. I hope this video inspired some people about the nasty sell ratings today. 3 of them, of course. Of course, I'm not smart enough to cover the other 2 because they're so lending related, and that shit goes on for 20 pages, and no one can be right in the end. I'm gonna listen to Chris Lapointe, Dartmouth, when it comes to loans. Okay, I'm gonna go with him for now. All right, y'all. I really appreciate it. Y'all know you're gonna see me out on Twitter, more YouTube videos. I'm not going nowhere. I think this stock will print billions of dollars. Not that long from now. I think not too. You know what I'm saying? Billions. That's what I'm betting on. So y'all have a great day. Okay. I'm brand new to this live stream stuff, so I try my best flipping through the slides as fast as I can. So appreciate it. Have a great day, or have a great evening.